So today we're going to be really going through some creative deal structures, and this is basically how to do deals and to mitigate risk in a volatile market. We're obviously living in the middle of a volatile market with this whole coronavirus scare, which kind of just makes it all the more important that you really know what you're doing and that you have the skills, that you have the team, and that you have the process in place to execute on deals, but to make sure you are not doing any speculation. The people that are speculating, the people that aren't sure of their numbers, the people that aren't sure if their deal will exit correctly, and you're really never sure. But I think this is just forcing people to really spend more time thinking about that and saying, hey, am I really confident this is going to be a good deal? And if you're not really confident of that, you're setting yourself up for a lot of potential risk and failure. So again, when I say a creative deal structure, it's, again, one of the best ways to work on a project while not taking on a ton of liability and risk. And so what does this mean? You're trying to figure out ways to do deals without risking a ton of capital. Or you're waiting to invest the capital until you're sure that you have a good project that is financeable. You have an LOI from a lender. Maybe you have pre-sales. Maybe you have tenants lined up in place ready to go, and you're kind of doing a build-to-suit situation. You have units rented if they're residential units. You have people or agents, real estate agents, if you're building homes that are saying, yes, I've got clients that are ready to go. Maybe they're taking pre-sales. Maybe they've done some customizing of units. So you're trying to say, hey, what, but how much, do I have to spend to get to that point? And, the simplest way to do that is to go in and get a loan or to purchase property cash, than to spend cash or to have a loan on the pre-development costs, which is the zoning, platting, site plan, getting architectural drawings done, getting EMAP, getting structural work done, getting a geotechnical study done on the property, and all of that's just cash. It's just cash out the door, cash out the door, cash out the door. And if you can delay the spending of that money until you've checked on as many things as possible, it's going to be a good thing to do. And the reason most people don't do that is because they don't want to put money into a project that they do not control the dirt. And when I say control the dirt, normally that is I own the dirt that we're talking about, or I have the dirt contracted, or some sort of an LOI, a binding LOI in place, or some sort of a unilateral way that you can rescind the contract, but your seller can't walk away. And without one of those things, it can be difficult to justify, hey, why am I going to spend, 10, 20, 30, 40, $50,000 on this if I don't have some of that stuff in place? So, and the reason creative deal structures work well, let's talk about why they're good in urban areas. So you can say sometimes in urban areas, property has been owned for a very long period of time, right? So this property may have been passed down from property owner, from parents to children, and while it's been owned for a long time, there was most likely a low basis in the property, and the basis is how much debt or expenses are on the property. What is your debt service? And a basis is low if you don't owe a lot on the property, and the basis is high if you do own a lot of the property. And if you're paying market rate for something, the basis can be fairly high. And you may be walking into a situation where there is a fairly high amount of leverage. And, we consider low leverage, 60, 70, 80% is that's typical leverage. I would say low leverage is anything under 50, and is going to be a really good thing. And you can increase your basis by either A, paying it down, or having the value of the property go up. So now you have more equity in the property. So if you bought a property and you bought it at market rate at $100,000, and now the property is worth $500,000, you only have a 20% leverage on that property because you have a 80% equity in the deal. So that is also something that happens in urban areas when property values have increased. Sometimes this can happen very quickly once an area begins to get going. And we talk a lot about that in the Infill Development Academy, of just going through, hey, what can you look at and how can you be monitoring areas and deciphering when is an area going to really start increasing in value, and to buying early or controlling properties early in that cycle so that you have the opportunity to not only force appreciation by capital improvements or making a deal happen, but also by the entire area going up in value. But again, you just have more flexibility with a seller. A seller has more flexibility with you if they don't owe on the property, right? So they've just bought a property and they're paying their debt service every month and they don't have a lot of equity. They don't have room to say, yeah, let me let you work on this. Let me partner with you on the payments. They need to make sure that the bank's getting the payment every single month or they're going to lose the property. So a recently purchased property or a property that does not have a lot of equity in it is likely going to have few ways that you can creatively structure deals. Urban is great for creative deal structure because you can go to property owners and say, hey, this is going to take a while to get the pre-development and paper development activities completed. So if you have a lot of work to do on the property before anyone can break ground on it, you are either going to have to do one of two things. A, you're going to have to usually get a discount on the property because if a developer is going to purchase it, they're going to say, hey, I've got a long road ahead of me to getting this ready to be developed, or they're either going to take a discount on the property or you need to have some sort of a partnership structure in place where you say, hey, I'm not even going to buy the property from you unless this stuff is done. So when you're able to go to someone and say, hey, this could be worth a lot of money, but to get there, we have to do zoning, platting, we have to get geotechnical study done. Maybe there's remediation related to geotechnical done. We have to get historic approval to do a demolition on the property. We have to complete all these activities. We have to replat the property. We have to divide into lots. We have to add roads. All of that takes time and money and is before a property is, quote, shovel ready. And shovel ready is when you're ready to go vertical on the construction. And a builder, a developer, many times wants a property to be pretty close to shovel ready because they're looking to mitigate their risk. So when this happens, and there is this long road to getting a property ready to be developed, you will see properties sitting for very long periods of time because the owner says, hey, I know this could be worth this. And developers say, yes, it could be, but I'm not going to take the risk and I'm not going to pay you the value currently if the property is not in that current shape. So if the property isn't worth that currently, why am I going to pay as if it is worth that? And so then you see properties just sitting and they're waiting and they're land banking and they're just saying, hey, until I get some ridiculous amount of money, I'm just going to sell this property. And how can they do that? Again, that's because they have a low basis in the property. Maybe they own the property cash. You see that many, many times, or just, it's a very, very low, very easy payment. Again, if they bought a property 30 years ago on a 30-year note, what is the property value done in 30 years in many of these urban areas? It might have gone up, 5, 10, 20x even over that period of time. So they're able to say, hey, I know I'm paying a couple $100 a month for this, but I'm not paying thousands of dollars a month, and I can afford to make that payment for a very long time and just sell this property in hopes that someone will come and cash me out. So, just why sitting on the property and land banking is not a good thing to do, especially if you don't have a development plan. It does nothing to move the property toward the highest and best use. Underutilized or non-utilized properties are normally, they're degrading. They're not just staying in the same shape. They're usually getting worse because there are leaks in the property. There are vagrants on the property. There are people leaving trash. They're dumping on the property. And it really just doesn't do anything to help the values of that entire area go up. So when someone again says, hey, this property could be worth this, right? If I could get a hotel developer or an apartment developer come in and do this project, it would be great, which it would be. But if there's a lot of people doing that, there are no comps to set. And so you have no justification for why that might happen. It's easy to talk in theoretical. It's easy to say, hey, someone could do this. Well, sure they could. Are there comps? Are their properties ready? How long is the process going to get going? How long is the process going to take to where they could even break ground or pull permits or even go to a bank and get financing? So there's a complicated path between having a property that could, quote unquote, be used as something and having it actually be used as something. So all of that comes back to saying, hey, if you can creatively structure a deal, there may be benefit for everybody involved. So some of the things that any property will pretty much need if you're trying to do something that's a little bit non-traditional, which is just writing an owner a check and purchasing a property either with cash or with some sort of debt financing instrument, the property needs to have equity, right? The equity is going to help you paint a picture for investors, for developers, for a bank, and it's going to help the owner stay and work with you through this pre-development process. The debt service basis has to be reasonably low, mortgage, taxes, and insurance. And again, The mortgage can be low because the property's been owned for a very long period of time. The taxes can be reasonably low because if there haven't been improvements made to the property, you can routinely protest that the value has not increased and keep the value down. And again, if there's not new um, improvements on the property that have had a value on them set recently, which will directly affect the insurance cost, you can keep the insurance reasonably low. And again, it's people who are saying, hey, if they build this super nice Class A something on my property, it could be worth this. But so I'm not going to sell it for a lower value because I think someone at some point may come along and do this for me. But again, why are they not doing that? Say, hey, great, yeah, you have a property. Maybe it could be worth that. Here are the things you need to do to prep the property so you could have an intelligent conversation with somebody, not just talking in theoreticals. There is a process, there's cash to spend, and there's know-how that needs to be there for you to be able to execute on that work. So how do you structure the deal? So you find a deal that's not being used in its highest and best use and has a path to be used in its highest and best use. So you want to go to the property owner and you want to create some sort of a partnership or an option to buy the property. And you need time, and you need to also establish a value for the dirt. And this is when you having local market knowledge is really, really important. So you can go into them and say, hey, let's talk today, right? Let's first say, what is the property worth right now? It could be worth that, but it's not worth that today. What's the property worth now? And you need to be able to set a reasonable, relatively accurate value of the current state of the property, not in its cleaned up state, not in its demoed state, not with underground utilities run. What's the value of the property worth now? And then you work toward figuring out what is the value of the property later. And so you need to be able to run financials and say, hey, the highest and best use of the property is this. A project that's worth $10 million will normally spend between 10 and 20% of the value of the project on their land. So if we can get a developer to see the possibility of building this $10 million deal, your piece of property may be worth $1 to $2 million. But today, it's only worth $250,000. So those are two important numbers that you need to have buy-in from the owner on so you can begin to structure a deal that works for both of y'all. And then you will need to get some sort of a limited power of attorney signed so you can begin to do the work to put something together that you can present to buyers, to investors, developers, you can go raise money on and do it yourself. And again, this is saying, hey, I'm going to help you get to that later value. I'm going to take you from the now and help you get to the later. And by working with me, this is the only way you're going to get paid on that later value unless you do the work or you sell at a discount. That is the picture that you're trying to paint for people and what you're trying to get them to buy in from you with. And the only reason they would be willing to say, yeah, let me go on this ride with you, let me trust you that you're going to be able to get this done, because they think and they know that if this works, there could be a really big payday at the end that they're not going to be able to capitalize on any other way. So you're going to need to get some sort of a limited power of attorney so you can do work on their behalf on this property. So you want limited to no payment now. You're saying, hey, we're going on a journey together. I'm exploring with you whether this is something that I can do. I have the resources. I have the team. I know who to talk to at the city. I know the engineers to talk to. I know the zoning people to talk to. And I know developers who I can talk to. So you don't want to say, you want to really paint the picture that you are working with them, that you are on their team, and this is not them selling it to you. This is both of you selling it to someone else later on down the road after the work has already been put in to getting it prepped for that. Okay, so then you're working on getting the property more usable. And you can even structure these, and what I'd highly recommend you structure these, you're going to be improving the value of the property even if you don't get it to an exit immediately that is going to be this huge $1 million payday for you and the owner. So I would structure the investments that you're making into the property, maybe not your time, right? I probably wouldn't do that, but you say, hey, if I'm going to be spending money hiring engineers, hiring contractors, getting soil samples done in studies, that needs to come out of the cost of this property when we sell it. and I would say, hey, we're going to be getting it done from a developer. You're going to obviously get paid anything that you've invested into the property over time, right? But while I'm doing this kind of prep work, I'm going to be keeping a tally of it, and that's going to kind of come as an above the line expense before we divide up profit. So you're not necessarily you're writing checks initially for that, but you've got a path to making that money back, and a way to protect yourself and to get that money back is to file a mechanics lien on the property. And this goes in line along with a mortgage and along with other expenses if they have other debts that they have to pay. If something goes south with you and they take all this work that you've done and the platting and the zoning, they just want to take it and sell it to someone else, at least you're not going to be out this money if you have a mechanics lien on the property. Then you got to figure out who makes the payments in the meantime, right? If there are payments to be made, if there is some sort of a mortgage, if there's a tax burden, if there's upkeep, if there's maintenance on the property, who's going to be making those payments while you're doing this work? That can be something that you split 50-50. But again, I would keep a tally of any expenses you're spending on this property before you're going to get paid. So again, can you rezone and can you plat the property? And normally those two things are going to substantially increase the value. They're not easy. They can be time consuming, and you are putting in effort and work and maybe even hiring people to put an effort and work into this property to improve the value. And you don't have this property in your name. Again, this is why people don't want to do this without controlling the property. So it's this weird limbo state of catch-22. So you need to figure out, hey, owner, no one's going to do this unless you sell it to them at a discount. And the only way I'm going to do this for you is if you allow me to protect my interests by doing these things and to have some sort of a right to at least make my money back while I'm getting the property rezoned and platted and ready for your use. So then you need to put a site plan and a marketing pack together. You can work with them on that. You want to get pictures. You want to get renderings done, most likely. You maybe run a basic pro forma. We talk a lot in the Infill Development Academy about how to run financials, how to paint different pictures on exit strategies, and what you can do. And so you need to put a marketing packet together that really paints this picture and helps people understand where the property is along the path to being a developable piece of land in whatever state you're working in. So can you go ahead and get the demolition approved? Sometimes if there is an old structure, there may be pushback from the city to get demolition done. And it could just be an old junky falling down house, but there may be a reason the city wants you to try and save that. Again, that is something that could take, not weeks, but months to work through. And so a lot of these things you're playing waiting games, right? So as long as you're having the zoning answers responded to and you have a few meetings, it just takes time to get in front of all the different councils and the different governing bodies to get the zoning approved. Same thing with platting, same thing with getting demolition permits approved. So, and if you just bought this land for $1 million, you're going to be paying interest on that every single month. You're going to have your capital tied in every single month. So that can be, paying thousands of dollars a month in holding costs that you don't want to do. So that's why there's a huge advantage to doing this now. So you're not under that same gun, and you could be having this going for half a dozen properties at the same time and just be working them and pushing them along this development path toward getting them approved and ready to be built on. You can get environmental studies done. You can get soil samples done. Again, those take time to turn around. It's way better to do that before you purchase the property and you're paying holding costs. So how do you exit these deals? So after you've done this work and you've painted this picture, you can sell the deal with a path forward to a development partner. So you can just say, hey, I've done all the due diligence. I have a property contracted. And it's setting expectations with the seller too, right? So if the property is shovel ready, you're going to be able to sell it for more. If you just laid out a clear path forward and you have approvals from the different governing bodies, but you haven't actually executed on the work, you're going to have to take a discount. If you want to actually go into business with the seller, and one thing you could look at is potentially pulling equity out of the land if they have a ton of equity in the land and kind of financing some of these pre-development activities with that land equity, you might be able to do this and then just sell the lots to actual individuals. Or you could partner on the entire development and actually execute on the project and say, hey, we'll set a value for the land. You'll make some of this upside on the land, and then you'll own some of the development when I get that taken care of and finished. And again, another way to take value on this, are you going to be taking fees? Are you going to be keeping equity along the way while you're doing this work? Are you going to be having a pre-development fee, or are you going to have a percentage of the overall project? Again, if you're selling it to any other partner, there can certainly be an acquisition fee, and there could definitely be equity on the back end for helping them prepare this project and get it shovel ready. Couple quick action steps. Go ahead and start finding land that fits this above criteria. Find a piece of property that's been owned for a long time. If it's been owned for a long time and the area's gone up in value, there will be equity unless they've pulled out another loan against the property. Super, super important, easy to do. You can just get on your tax appraisal district. You can start looking at parcels of land. You can see where they are, and you can see how long they've been owned. Very easy first step. Contact the owner to figure out their plan for the property. What are they doing with the property? Why is the property sitting there? Does the property have liens against it? Maybe there's a lot cleanup, a city lot cleanup lien. Maybe there are code violations on the property. All of these things indicate that a seller does not have a plan forward to execute on some sort of a deal, and maybe they're looking for someone to help them. You need to then identify what is the path to this highest and best use, and then what can you do to help the property get close to being utilized in the highest and best use, and how do you capture some of that spread by that upfront work that you're doing? Again, you want to structure the deal with little to no cash out of pocket. If you're going to be putting cash into the deal, I would much rather be putting it toward actually getting zoning, platting, site plans prepared, getting renderings done, getting soil studies, getting environmental studies done, getting geographic and demographic studies done. You want to be putting that toward helping push this deal, getting closer to a usable deal, and not toward paying off a seller and saying, hey, we're going on this ride, we're going on this journey together. And this is one of the best ways to invest your time in limited cash, and then you're sharing in the rewards of getting this property closer to being developed. And again, in a time like this, there are even less developers writing the big checks, right? They're scared. They're wanting to do less speculating. They're wanting more concrete answers. They're wanting more concrete deals. And the more you can help get deals closer to shovel-ready concrete deals where they can easily run financials, they can easily pull data, you're going to be better off. They're going to be better off, and you're going to be better off because you're not investing a ton of expense and money into the deals. But you can invest time, you can learn the process, you can learn about structuring deals, and you can still make some incredible returns. Hope this was helpful. Excited to see if there's any questions. I'm not seeing anything right now. But this is a way that you can be, again, immediately implementing on. You can be doing this now. You can be doing this in a down market. You can be doing it if people are scared, and sellers are going to be more open to creatively saying, hey, I can't sell this property for what I thought it was. There's this whole viral scare. The economy's in shambles. The economy's on, hopefully won't stay in shambles, but there is uncertainty. And when there's uncertainty, that leads to either discounts or flexibility on how you're structuring deals. So take some time. Think through this. I hope it's helpful. This is something that my team and I are going to be pursuing more of now. We're going to be we're not going to be buying as many just parcels of land that require all this work to be done. We're going to look for ways to creatively structure these deals, and excited to keep going, excited to keep pushing, and hope your 2020 continues to grow and progress. If you have any questions or anything, I guess the last slide didn't show, this is only a tiny bit of what we discussed in the Infill Development Academy. Would love to work with you if that's something that you're interested in doing. If you have any questions about that, feel free to reach out. Talk to you later. Thanks, guys.